All right, guys, weekend's over. Back to work. Here we go again. Big week ahead of us. Monday evening. We're getting ready for Tuesday. Got a big day coming tomorrow. Got some big news. We got some juicy ranges on the charts tonight. You know me, I love trading ranges. Got a bunch of great trades we're tracking for Tuesday's trading session. I'm going to go over all my favorite trades in tonight's video to make sure you have a game plan to make some money tomorrow. Before we jump in and get started tonight, though, before we go in it and get this party going, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, if you guys enjoy the video, do me a favor. Will you hit that like button? I appreciate you guys supporting this YouTube channel. But enough of the intro, right? I'm a couple minutes behind schedule. Had some technology issues earlier on this afternoon. That's all right, though. We're not going to let that stop us here from getting the trades put out there on our nightly newsletter. So what's the game plan for tomorrow? Well, everything is bullish right now, you'll notice, right? Bullish rotation on the S&P, bullish rotation right now on the Nasdaq. Oil has a very nice potential bullish slingshot breakout, slingshot rotation going higher as well. So we definitely are bullish, and we have quite a bit of a kind of a bullish bias on the S&P and the Nasdaq right now. We'll talk about why I say that in a moment. So you have to think, boy, with some big earnings coming tomorrow, with the Fed next week, with, of course, the end of the month early next week, you got to think there's possible for some more of this melt up and some definite possible breakouts going higher here. So I definitely have a handful of breakouts you guys should keep on your radar for tomorrow. But if you watched my intros, my YouTube shorts this afternoon, we are at major areas right now of resistance on the Emini and the Nasdaq, which with that range below us here, you know I would love to get some reversals. I see plenty of reversal opportunities here on the S&P and the Nasdaq as well. So we definitely have potential shorts. We certainly are keeping an eye out for some breakouts. Over on the oil, get a great chance for a breakout, right? Going higher here. But remember, don't fall for those fake out breakouts. I could easily see some fake out breakouts and a dump. I got some key levels down below around 83 even. So we're definitely going to make sure we cover all the bases across all three of these markets tonight. Got a lot of good trades to make sure you guys make some money no matter which one of these markets you trade tomorrow. Now, speaking of tomorrow, before we jump in and talk about each of these markets here tonight, this is a big week. This is a big week. We got the end of the month, right? So, of course, end of the month, which is officially next Monday, right? Don't forget that Halloween costume. Halloween is next Monday. So we definitely have a big week. We oftentimes see volatility kick up a little bit into the end of the month. So as we get later on in the week, you got to be thinking that volatility will begin to spike. As we look tomorrow at the news reports tomorrow, the only real news, the economic news is consumer confidence at 10 o'clock Eastern time. But really, I mean, the big emphasis tomorrow is going to be on the earnings. We talked about this last week. We are going to get, in the next 72 hours, we will hear from probably, I think it's like 50% of the entire S&P 500 and NASDAQ market cap, right? All the biggest companies. You'll notice before the open tomorrow, we got UPS, GM. Those are the big names. After the close tomorrow, we got Microsoft, Alphabet. In the next 3-4 days here, we're gonna bang out what is most of the biggest companies on the planet. And what you want to remember about this right now is, and we talked about this last week, is that the news right now with the Fed next week and the Fed basically committing to raising rates to get inflation under control, even if it means killing the economy, we have to be thinking through the lens of bad news is good news and good news is bad news. So be careful with any knee-jerk assumptions about, for example, if we see bad data come out tomorrow morning before the open, if UPS misses, if GM misses, right? If we see some what we thought to be bad news, remember that might be interpreted by the market, right? And we'll have to wait and see tomorrow. It may be interpreted, though, as being bad news, may mean the Fed may not need to raise rates as aggressively, right? To be a bad news is good news. And again, a good news is bad news. This means if we see very good earnings tomorrow morning, right, that may lead traders to think, oh boy, the Fed will have no choice but to increase those rates here at the next 2 or 3 meetings. So bad news is good news. And again, remember, before the open and after the close. So for the rest of the week this week, be very careful in the pre-market and be careful coming out of Asia, right, when they reopen the electronic markets in the evening, you really want to focus on kind of the middle of the day, right? The U.S. morning, U.S. afternoons. Be careful into the close. So be aware of that, right? Be aware of the earnings. We get consumer confidence tomorrow at 10 o'clock Eastern time. I'm always saying this in my trade room. We find some of our best winning trades between 10 o'clock and 11 o'clock with that consumer confidence number tomorrow. That might be more in store there as well. We have some really, really big news coming later on this week, right? GDP, we got the employment number coming, or personal income number coming on Friday. So this is going to be a busy week. It'll be a busy week here. We get end of the month volatility. There'll be no shortage of catalysts for us to work off. And remember, the news is just a catalyst. We're not trading the news. We'll trade off the charts. The charts will give us the entry and exit signals that we need, and we'll talk about some of those here now for tonight. Now back to our charts here tonight. I'm going to cover all my favorite trades on these three markets. You might only trade one of them, or you might trade all of them, but make sure you watch all the way to the end, because you will learn different trade setups, different tactics I'll use, and I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. Let's go S&P, let's go Nasdaq, and we'll wrap things up, of course, on the crude oil futures to finish up Monday evening's video newsletter. Now, real quickly, upper left-hand corner, you will notice these are all going to be tick charts, and you can see the exact tick chart in the upper left-hand corner. Also be aware too, the S&P and the Nasdaq are very similar. They're very interchangeable right now. So whatever I talk about on the Emini and the SPY can pretty much be applied to the Nasdaq and the QQQ. So just be aware of that interchangeable kind of tone to them right now. So knowing that information, let's jump right in. Where are the best trades for tomorrow? Well, there are four kind of insights, four clues on this chart that are telling us where the likely best opportunities are going to be for tomorrow. The first one is a bull bias. Now, not just right now, because we're definitely pretty bullish right now, as you can see, but look at a 4-hour chart right now, right? Right now in a 4-hour chart, we have a nice rotation off that big range. It's definitely more bullish than bearish right now on the 4-hour chart. That is the bull bias. Now, what does that mean? Well, it definitely means that if we see more bullishness going higher, we're definitely going to buy pullbacks, buy breakouts, right? Things like that. It also tells me that if we were to end up all the way down at that low, I'd be looking for buys right off support below that trading range as well, right? So buying breakouts with the right patterns and buying what you call like a seller failure, right, off of key support levels below. The second big key insight is a strong move that's now been retested. This is a really big part of this. We kind of finished up the week last week on Friday with that move higher, and then you can see here overnight on Sunday evening, they had that really strong move, right? That strong move, anytime we see a strong move in one direction, we expect to get a pullback and a retest, right? So they've already now retested that high. At this point right now, we're basically waiting for either a breakout to new highs, or we're waiting for buyers here to struggle and look for a short back down into that trading range, which of course is a magnet. Now you could easily argue and say this is a very strong move, which suggests that we in the short term are very, very bullish. That strong move going higher, they're going to want to retest, right? Anytime we see a strong move, we expect that pullback, that retest, and potentially a breakout going higher. Then another bull clue, another very bullish clue, a range with rotation off the low. There's a range of the chart. The market moves below the range and then rotates off the low. Now you could definitely see, right? We're very bullish here in short term, medium term. Now you could easily argue and say, well, Joe, the amount below that range has completed what's called the pendulum swing up at the high of the range. So we're definitely bullish right now, but you can see we're at major levels of resistance, right? That pendulum swing overhead, that prior high overhead. If you watch last week's videos, I talked about, where is it? Come on. That big top, right? I mentioned that big top a few times last week. That 38.20 I thought was the big bull target, right? We talked about that a few times last week on the video. So we're right there now, right? We're right at a big, big, big area of resistance with lots of bulls in the market here right now. So again, like I mentioned earlier here, buyers want to break out, or we have to think it's going to want to snap back into that trading range, possibly for a short going lower. We do have a support trend line. And this support trend line is kind of the wild card, right? That support trend line is difficult to ignore. Now, it might be even a bit higher. You'll notice it might be even a little bit higher there, a couple of wicks down there. You want to think of that trend line maybe as kind of a zone, right, of prices right there. So that obviously will be a bit of a hurdle, right, for the bears. If the bears are playing it safe right now because of the bull bias, that could be a bit of a hurdle here, right, for us to want to sell short on this. And that really is, I think, one of the biggest parts of this is very bullish off that low. We're at resistance. And again, we have that support trend line. So I would love to get some shorts, right, coming back down into that trading range, and I get some eyes and some breakouts. How do we make money on the sell side right now? What would be the best way to trade this if the market goes lower? There's really probably 4 ways to do this. One would be because of that trend line, right, being support, combined with the strength of this move higher, I have to respect the buyers right now. And what I mean by that is I can't just sell into this stuff, right? It's too bullish. What I'll do in this situation is anytime I'm worried about selling when I have a lot of bullish momentum, I like to use what's called the 2-try rule. Let the buyers try once, let the buyers try twice, right? Let them buy a couple times. That way I can use their stops as fuel, right? This is again kind of a signs of exhaustion, right? So buyers try a couple times. And I can think now, okay, if the buyers are in and they get stopped out, that'd be a really easy catalyst for me, right? That'll add gasoline to that move going lower. So I like the idea of using a 2-try rule for a short back down again, because I don't want to just blindly sell with all this bullishness. At the same time, though, that trend line is a big, big problem. So I don't want to be selling as I go lower, right? Because I'm selling right at that trend line. This is where a trap comes in. So a trap is definitely going to be your best friend right now for the entry going lower. That's one of the ways I can do it, right? So again, let's say the market opens up in Asia, we run lower, wait for one more, get that trap entry. Nice strong signal, right? This is the same failure patterns you guys learn in the free trading course, and that will be a great 2-try, right, failure with a trap setup. The trap is necessary right now for that trend line. Now, we might get lucky, right? The buyers may come in, they may try to blast this thing higher, and we might see a fake out breakout. Right? In other words, they may not get that full breakout going higher. We may go right back up, retest the high, and then think about now what's going to happen, right? That trend line hasn't gone anywhere. Okay, so even if we do retest here right now, I think a trap entry is still going to be the best bet here, because again, you get that trend line to worry about. I normally, if you guys watch these videos, I wouldn't need a trap there. But because of that trend line, I do need that trap to get the reversal off the high, right? And again, we talk a lot about traps in our free trading course. Another one of my favorite shorts for tomorrow would be, let's say we get a move going lower, right? Let's say the market now kind of breaks down and begins to grind down, okay? We're going to clear that trend line now, right? Clear that trend line. Then what I'll do is draw a channel, draw it backwards, draw it off the low, bring it up around the high, and then really kind of the ideal scenario is we'd like to use that trend line, right, as a key level of resistance. Now, I always tell you guys, once you see kind of those pop and grinds as it goes down, start thinking about where some prior swings are. I would love to combine a trap high, right, above a prior swing, along with that trend line. Boy, that would be a fantastic short there off the top of that channel, right? A trap above a prior swing. Think about now, the buyers come in, they try to buy it. We can now sell, right? Using those stops as fuel for a failure pattern. Failures oftentimes will turn into pullback combinations. And then where does the market want to go? Yeah, it'll want to take out these lows, right? Take out that low there, take out that low there, take out the pendulum swing on the other side. I think this is probably the highest percentage short as we go lower. That strong rotation lower, shorting that pop around the highs, traps, failures, pullback combos, all the same stuff you guys learn in the free trading course, which reminds me, I know that most of you guys have taken the free course. You've learned all the setups. I love seeing those emails and the comments you guys post, making money with the stuff in our free trading classes. But hey, if you're here for the first time, if you haven't watched or taken the free course yet and learned all the entry tactics I'm talking about in this video, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, join our free trading course, because the strategy that I teach in that free course, that video series, will help you find, it'll show you where the best winning trades will be. It'll make it easy to avoid losses. If you're missing the best trades each day right now, or you're taking too many losses, definitely grab that course. It's perfect for someone trying to make the jump into full-time trading. It'll give you a roadmap to follow, give you a ton more confidence. You'll love it. So grab that link, take the free course, learn all the setups, and let me know how much money you're making off that stuff when you're done. I always appreciate the inspirational post there. Now, we've talked about the 1, the 2, the trap back down. We talked about the retest. We've talked about, for example, if it goes lower, if they hold the pullback, right, and they blast going lower, right, I'm going to find that channel off that low. I'm going to look for that channel high, and I'll find one of my entry setups off the high of these channels, right? These would be called 1, 2, 3 reversals. Just make sure you get those before we get down other side of that trading range, right? So there's a lot of ways in which we can short this if it begins to roll over. The next question is what if we end up all the way down at these lows, right? Can I buy off that low? You can, but you got to be careful. Why? Because as it rotates off the high, what's going to happen? It's going to be a lot of bearish momentum. And anytime we see a strong move in one direction, what do we expect? A retest of that low. Once we get a retest of that low, then do we fail back up? Great trade, by the way. Probably the best reversal you're going to get off that low. Or do we keep going through it? Right? Do we keep going through that low for a breakout going lower? And of course, we have just a little bit of space down there, right? Look at all that wide open space we have the bears would love to get their hands on. So if we do end up getting that, let's say we do get that pop and grind down, we get that channel, we get that short, right? Everybody cashes some big paychecks down here. Now what, right? Now what? Now we end up down at these lows. There are two basic scenarios to buy it, right? One is because of the strength of this move, this is where a crown reversal is necessary. You want to think about the bears now. Again, remember, a lot of bear momentum. So use the 2-try rule. Look for signs of exhaustion. Let the bears try once, let the bears try twice. Now, I've talked about this in previous videos on this channel. What you want to make sure you understand, though, is that when we are before the retest, okay, we haven't retested that low yet. Before the retest, we have to make sure that we are buying this reversal as low as possible, which means you don't want to buy it as it's going higher. Okay, the reason why is because that's where bears are, right? Sellers, they want to sell high. So you got to make sure you're getting in on a trap, right? This is the same basic idea I talked about earlier where I said, let's go up, look for a trap high, right? It's the same basic idea. This one simply is a trap low or a bear trap. And again, it's very, very important you see the reason for this, because as it goes higher, it could come right back in and come back down again. I don't want to be buying up there. Okay, that's the difficult part about a strong move like this. So a crown reversal pattern, right? 2-try failure with a trap low. Or the easier one, it will be, let's say they get that move lower, right? They pull back, they retest that low, right? Now, mission accomplished. Now the bears are already in, right? The bears are already in. They're now taking their profit at that low. The mindset now is I can be a lot more aggressive. Now I still need to look for signs of exhaustion because, again, we're still very bearish and I need some sort of catalyst. And the easiest way to get some juice behind me for the buy side is to trap in some of the rookies. Right? Think about it, right? Professionals, more experienced traders, they're selling high because they can risk small to earn large. These are the rookies down here, right? These are the inexperienced traders who haven't learned this valuable lesson yet. Once they try a couple times, think about where their pain is. right? Think about where their stops are. Okay, down here, we'll have buyers buying off the low, and when the bears get stopped out, they'll become, right? The bears become buyers as well. Now, one of my favorite combinations on this, right? Two try failure into the pop going higher. One of my favorite combinations on this is to grab the failure and then find a new channel. Draw off that low, up around that high. Now remember, look left, find that trap. Right? Think about those prior swings and grab that, as I would say, the first test is the best test. Now, I'm keeping it pretty simple right now, right? This could be a trap like this one. It could be a failure, right? Below the moving average. It could be a pullback combination. Any of the 4 entry setups I teach in our free trading course. There are hundreds of examples of those setups in the free courses. So definitely grab them. You'll learn them. So I like that strong move down, right? Hopefully we can find our way in on the way down. Get that retest. Trap in some of the weekends, right? The dumb money, the new traders in the market, and then go, right? And then grab that turn as we go back higher. I really like that sequence as well. So now we've covered the move going lower. But again, we're a bull bias, right? How do we make money on a breakout? Right? How do we make money in a breakout? There's plenty of ways in which we can make money on the breakouts and fading those breakouts. Why don't we grab a look now on the NASDAQ? The NASDAQ and the S&P, of course, are very, very similar again. And let's see here. There are 3 key insights on the NASDAQ, right? The one big difference here is that trend line, right? That trend line is not really as important here, right? On the NASDAQ, you can see why, right? We've already kind of broken below that trend line. Everything else is pretty much the same thing, right? It's an overall bull bias. Again, look at a 4-hour chart, that range rotation. In fact, to be very clear, if you look at a 4-hour chart right now, this is basically what a 4-hour chart looks like right now. Right? Look at a 4-hour chart on the S&P and the NASDAQ, and you're going to see something very similar to what you see right here. Okay, now again, this is a 4,000 tick chart. This is not a 240-minute, right, a 4-hour time frame. But when you look at a 4-hour chart, you will see pretty much exactly that. There'll be a range in the middle, and again, there's a lot of bullish momentum here. That's why I say on a 4-hour, there's a bull bias. Okay, but yes, on a 4-hour, and yes, on this chart as well, we are at major resistance. Right? So again, same thing as the S&P. We're definitely bullish, but the buyers have to show up right now. The buyers have to prove to us they've got what it takes to break out of this market, right? Break out of this range here. Strong move higher. Now the NASDAQ is a little bit different, you'll notice, right? Strong move coming out of last week. Strong move wants to be retested. The S&P did it. The SPY did it. NASDAQ, not so much yet. But again, you could easily argue with me right now and say, yeah, but this is a strong move. So even if they'd already retested that high already, right, like in the S&P, that's a strong move right there, right? So they're going to want to retest that high. Whenever we see a strong move, we have to respect those buyers, right? Anticipate now a pullback, a retest. Once they get the retest, then do we see a double top reversal, right? Which I love for tomorrow, or does it break out, right? And we'll talk about some breakouts here in a moment. And then again, kind of the third bullish clue, right? The third bullish clue is a rotation off the low. I'm telling you guys right now, one of the biggest mistakes I made early in my career was being blinded to the fact that it's a range and wanted to be too aggressive selling into that trading range, because ranges are magnets. Right? So ranges are easy. Buy low, sell high. We've got great resistance, overhead, triangle resistance, right? That triangle is a very useful tool. There's no doubt about it. We're at major resistance. However, very, very important, we understand when a market goes below a range and rotates higher like that, it's just begging for a breakout. It's just begging for a breakout, like the oil right now. Oil has potential for that as well. So again, not a lot different here. I don't want to bore you guys too much repeating myself here on this. How do we buy the breakout? Right? We've talked about the ways to sell it. We've talked about the crowns. We've talked about the double tops. We've talked about the move going lower, finding that channel, and we've talked about the buy off of that low. Right? That is all fine and dandy. It's all the same stuff. How do we break out here? Okay. Now remember, one of the breakouts is a fake out breakout. Right? One type of breakout is a fake out breakout. So you got to be aware they may go back up, retest the high, fake out breakout, back down again. Whenever I think about a breakout, the first thing I think of is a fake out breakout. So be aware of that. The next one, really what you want to think about when it comes to breakouts is that as the market starts to run higher, you want to buy as low as you can get in, which means traps. right? So as the market goes higher, right, you want to try to get in on traps as it starts to make that run going higher. Do not buy high when you're buying a breakout above, or sell low when you're selling a breakout below. You always want to buy traps on the way up. Okay, makes sense because you're buying nice and low and you'll get that momentum to drag you higher. It's a very easy way to think about it. Then once we kind of start running out of gas up there, then we start finding bigger channels and we buy the pullback, right? We buy the pullback. Now, the reason why you buy the pullback is because, again, anytime we see a strong move higher, right, you're expecting a retest of that high. And then what you want to think about is can I short that top, right? Can I short that top? Could I get a double top reversal, which we talked about in the previous chart, right? So those are kind of, when I think of a breakout, those are the three components I teach my students and the three components I kind of think about myself when I'm placing trades. So again, as it's going higher, looking for traps. As it kind of makes that big move up, we don't chase it. We find a bigger channel, right? Drop backwards, find a pullback. And then remember, when you do retest the high, can I get that short off the high? So let's talk about that, right? Like one of my favorite breakout patterns is called the 2-try breakout, right? So strong move up, shallow pullback, higher high in price, right? Strong move up, shallow pullback, higher high in price. Strong move up, shallow pullback, higher high in price, traps. Okay, this is a very simple pattern, but make sure though you get that higher high, right? Strong move, shallow pullback. The shallow pullback, what does it do? It creates FOMO. It puts scarcity in the market. Everybody wants that pullback. They don't get it, right? The higher high confirms it's not simply a V top and a move back down in, right? Because it might do that, guy. Remember, it might pull back, try to go higher, and then fake out breakout, pop and grind, going lower, bingo, like that, right? We get those all the time, right? All the time. Where you get these big blasts higher, but they can't keep it going, right? And they V-top off the high into that pop and grind, and then we end up grabbing that short right off the high there. By the way, one of my favorite trades right now, right? As we go back to the side of that range. So, strong move, shallow pullback, higher high in price, traps, baby. Okay, traps, right, as we go higher. Okay, that's the way to do it as we're going higher. Then again, think about it, right? If think about now drawing that channel, right? That bigger channel. So think about now if we were to get, for example, something like this, right, where it pops and breaks out like this. Now, remember, you want to get that strong follow through, right? It's really important right now because, again, we're at major resistance with a range below us. I like the breakout because, again, I think we have some bullish bias here right now. I think a lot of traders are going to look at the bad news as good news, and we might be seeing a bit of a pullback in earnings this quarter. So, again, that's all speculation. Show me some proof, right? Show me some breakout proof. Now, once we have that breakout now go out and draw that trending off that high, right? Bring it down off that low. See what I'm doing here? And what I always do is I always look for traps. Right? So if we do get that strong breakout going higher, I'm drawing off the high. See how I draw a bull channel backwards? I draw it off the low, right? And then again, think about looking left, right? Find prior swings, find prior highs. Those will make for some great levels. And then what I always do is wait for the pullback. If I can get underneath the prior swing, that's where traps live. If I can get under the moving average, that's where failures are, right? Buying into stops as those bears come in and try to get short, right? We, of course, now go, no, it's a strong move. They're going to want to retest that high. I'll place my buy order right there and buy right into those stops for a retest of that high, right? So again, think about as the market pops up, again, shallow traps on the way up. Once it makes that big move to confirm the breakout, find the bigger channel, right, and buy those dips just below prior swings. Okay, also, keep in mind, with that news tomorrow morning, big earnings here, keep an eye out for those pop and grinds, right? It may pop and begin to grind going higher here if that's the case. And again, same thing on the S&P, right? If it pops and grinds, mark that high, right? Mark that low, drill down, find your swings, get those traps, those failures, and back up from there. It's the same basic idea. It's just getting in. It's just simply drawing the channel a little bit differently. Okay. Now here's a good question, right? Here's a question. We get that, maybe that pop and grind going higher, right? We get that pullback or that trap, right, off of that low, and we go back and we retest the high. Now, can I sell this, right? Can I sell this? You can, but what's the problem? Momentum, right? Momentum is too bullish to want to be a blind seller. I know we're at resistance. I know we retest the high, but we don't know the market reverses from there, right? There's a very good chance it keeps going higher. So what do we do now? We rope in some of the weak hands, right? Professionals are buying low. The rookies will come in, small trade accounts, right? They'll panic as soon as they get in trouble, right? 1, 2. Once we see those buyers show signs of exhaustion at the high, because we're so bullish, we need a catalyst, right? We need something that's going to give us some juice going lower, right? I can't rely on momentum to be that catalyst. So what I do is I wait for, again, whenever I'm trying to go against the short-term trend, I use that 2-try rule. Think about where their stops are. Think about where those buyers are now in trouble, right? And then look for that failure back down again. We'll talk a lot about signal candles in the video course, right? That free course, you'll learn about signal candles. And then remember, this is where the fun oftentimes begins. Let's say that double top reversal ends up really cranking, right? And running lower now. Now you know what to do, right? Find that new channel off that low, draw it off that high. Make sense? And then go out, find those swings, and whatever you do, do not miss that short off the high. Okay, that's one of my favorite trades. Again, sometimes we may not get that beautiful 2-try failure off that high, right? We may not get it, right? The market may go up, right? The market may go up, right? They may retest the high, mission accomplished, and it may simply fall apart, right? So you may not get a good signal off the high, but it falls apart and begins to grind down. Now you know what to do, right? Now you know what to do. You're not going to miss that short. Right? That's a good one. Because then again, we get a range below us, major levels overhead. Again, with that turn in momentum, that short becomes, I can't say guaranteed, but it becomes a very, very high percentage trade at that point. All right. So I think we've covered the most of it here right now. One thing you do want to remember is anytime we see a really big breakout, that bull target up there at 11,729, that is the bull target on the NASDAQ that the S&P's already hit, right? So the S&P's already reached its bull target. We've talked about these levels last week, right? So the S&P's already there. NASDAQ has some space to go. One thing I want to remember to do is if this market was to really gap up overnight, you know what I mean? If there was a really, really big move, okay, and this is not just the bull side. Anytime we see a really big move overnight, or in this case, could be because of earnings, if we see a big move, what you want to do is you want to find a bigger channel, all right? And I'll walk you through this tomorrow morning in the trade room. Find a bigger channel. We don't want to buy high, right? And we don't want to short this thing. It's too strong to short into it. What we want to do is you want to wait for that pullback. Now, what I always tell my students is whenever I see a big move in one direction, I know the buyers, of course, in this example, want to retest the high. We don't want to buy high, though. We want to buy low. So I go out, I find a bigger channel, I wait for a slightly deeper pullback. And what oftentimes happens is the pullback starts to accelerate, right? And once it begins to accelerate, when I was a new trader, I would constantly get fooled by that acceleration going lower and think it was a reversal, right? Think it's a reversal. Little do I know, though, the buyers are simply not buying up here. They're waiting for the pullback. Once it begins to accelerate, though, then you'll start seeing the weak hands, right? The weak hands will come in. They'll start to short this thing, right? Thinking it's a reversal because it darn feels like it is, right? It feels like it is. But again, it's a very big move. Buyers want to buy low. Once those bears get short, you know exactly what to do now. Think about what their pain is, right? And get in that thing. That could be an easy 10x trade right there. Again, with earnings reports tomorrow, anything is possible. And two, remember the same thing too, right? If we were to get a good news tomorrow, right? The market really dumps overnight, you know what I mean? Really, really, really big move down, right? Big move down. What do? You find those bigger channels, right? Those bigger channels. You don't chase it down here. You wait for it to pop up, right? What I do is I draw bigger channels. I get above the moving average. And again, once it begins to accelerate, You'll see what I mean, right? It'll begin to pick up speed on the pullback, and that'll trap in a lot of those buyers. It'll fool the buyers going, oh, maybe it's reversing. It probably isn't, right? Vast majority of the time it isn't. We did see one a few weeks ago where it did reverse, but vast majority of these, they'll try to reverse, they'll fail, and they'll end up right back at that low with a bunch of money in your pocket if you play the odds correctly. So now we got a pretty good idea of the game plan for tomorrow. Now we got to wait and see what we get here. Asia opening up right now, and so we'll see how things happen. And again, with earnings tomorrow, with big earnings tomorrow the whole week here, it's really very much just wait and see what we get and trade the reaction. Last but not least here right now, over on the crude oil. Oil, of course, is quite different, right? It is a bear bias right now on oil. Again, look at a 4-hour chart. Look at a daily chart. It's an overall bear bias. The bear bias tells me that as we go higher, I'd love to get reversals right off that high. If it goes lower, I would love to get some breakouts, right? Going lower here as well. So that's one big clue. Next one here is a strong move higher. Right? Anytime we see a strong move in one direction, we expect a retest, right? And a move back down or a breakout going higher. Okay. Next thing is a range, right? Range with what? With rotation off the low, right? Now you'll notice, right? We go up into a range, we pop up off the high, we rotate off the high. Notice here how the bears are coming in. They're trying once, they're trying twice. Notice though how the buyers come in and buy a trap. It's not always, right? But it's very, very common that when you see a rotation off the high, bears, of course, anticipate that move lower, and while they're trying to buy, they're buying as low as they possibly can because, again, they know as it goes higher, there'll be more bears coming in. Well, now it looks like those bears have tried a couple times. It looks like buyers are in a position now for a nice breakout running higher, right? Or at least a pendulum swing coming off of that high. And again, don't be surprised if we see a fake out breakout and back down into that trading range. And then last but not least, it's a familiar sight. It's a support trend line. We have that on the S&P and the SPY right now. Nasdaq and QQQs are definitely clear to go on that. But that trend line, it definitely creates a bit of a headache, right, for the bears coming in overhead. Now, buyers, right? Buyers would love to get this thing going higher, but as we go higher, be aware, major resistance range below us. You could definitely already see, right, that 1, that 2, and because of that trend line coming up, right, that 1, that 2, that trap off the high, right, for that short back down, some profit targets at the other side of that range, measure the amount above, the amount below, right? That is my favorite short off the high here right now. Let's say, for example, we go up, right, and we spit back down, that pop and grind going lower, same idea. Find that new channel, grab that short, right? Nothing new there. A lot of the same stuff we've talked about already here. If we go higher here, right, we go higher. Let's say we do get a big bull breakout. 87.14 is a major top overhead. That thing stands out like a big sore thumb, right? 87.14 with that bear bias right now. With that bear bias as we go higher. Think about that crown reversal, right? That 1, that 2, that trap high. That trend line, of course, won't be an issue anymore. Or, right, think about that pullback, that retest of the high, the 1, the 2, right? Sell into it. Grab that new channel as we come off that high, right? This is what the bear bias, right? Kind of tells us going higher. So strong move up. If they retest, trap in those buyers, right? 2 try failure. Grab that first test off that high as well. And then as always, right? As always, if we get a retest of that high, if the buyers can actually hold this and break out with some strength going higher, if we do see enough strength going higher there, I definitely can find that trend line, find that channel, find that trap, get below prior swings, get below the 21, trap in those bears, and get that retest, right? Remember though, this breakout, it's not enough to get a strong push higher. Right? Yeah, not enough, right? They got to hold that pullback. I'm not going to buy that pullback. Okay, why? Because again, resistance, range. But if they can hold that pullback and get what I call a 1, 2, 3 breakout pattern, then we know we have enough momentum up here, right, to warrant retesting that high. And then you know what I say now, right? If we do make our way all the way up, we retest the high, then what? Yeah, it's the same idea. Double top reversal. Back down we go, right? So that's a pretty much a similar game plan that we just talked about on the Nasdaq as well. All right, and obviously I'm kind of keeping it simple right now. These are the basics, and of course you'll learn a lot more of these specific tactics in that free trading course. So watch out, right? Watch out as the market goes higher. Now, what if I'm wrong? Right? I always try to kind of think about, okay, Joe, what if you're wrong right now? What if we don't get that rotation? What if the market takes off and runs lower? Okay, what's the problem right now? Well, first of all, it's a great place to be a buyer. You get a range overhead, big magnet. What's the problem though? It's a bear market, right? It's a very strong bear move down. You could easily argue that strong move down hasn't been retested yet. So the bears want to take that low out, right? If we do make a run lower, this is exactly where you break out that crown reversal, right? It's exactly where you go, okay, strong move down for whatever, something broke, right? Something failed. There must be something else going on. I don't see on this chart right now. Let those bears try once, try twice. You got to be careful here because, again, there'll likely be a channel coming down. And so you don't want to buy it, right? You don't want to buy it as we're going higher because what? It's all that bear momentum. You're potentially walking right into a trap. Okay, that's why, like I mentioned earlier, when you get a very strong move in one direction, the best way to call that bottom, trade that bottom, is a trap low. Because that way you're getting in and you're already making money on that trade, right? You're already well in the green on that position. You've taken your first profit target at that point. Your stop is trailing. And then bring it on, right? Bring it on. If the bears want to come in and take it lower, fine by me. Right? It's not a home run trade. It's a ground rule double, right? It's still a profitable trade. But again, you don't want to sell, you don't want to buy too high. Remember, buy low, buy at support. Now again, right, if they can get that run lower, the bears come in, they retest that low, wonderful. Now all the smart money is short. They're taking their profit now, right? The smart money's not going to sell down there, right? Again, they're selling high. Now we rope in some of the dumb money, unfortunately, right? The one try, the two try, and again, two tries because of what? Because of the momentum. Same thing, rinse and repeat, trapping those bears. As we go higher, find that new channel, right? And then trade that rotation back up into that trading range, right? So again, strong move down, retest of the low, trapping the bears, right? Grab the rotation. And again, think about this big old range up here. It'll probably be a little bigger at that point, right? Being a magnet up overhead. And then if things really fall apart, right? If they really fall apart, be aware on oil. We got 81.30 is a big low down there. So if things, for example, if we saw like a pop and a grind lower, right? The pop and grind's a really easy one because it's almost always you find that channel, right? And grab that first test, right? Off the high. Be aware though, there may not be more space down here to keep on selling. So if you get that strong move down, I like the short off the high if it's strong enough going lower. But again, be careful selling it really low here. It's more likely we see that retest of that low, trapping those bears, right? 1, 2, and then back up right into this what could be a bigger range here on the week. All right, guys, these are the basics, right? These are the basics for tomorrow, but now you get a good roadmap, right? Now you've got a good roadmap to follow. This is half the battle, right? Half the battle is let's plan our trades. That way we are ready for anything the market throws at us. And tomorrow morning, we're going to come out. The trade room opens up, 8 o'clock Eastern time. We're going to trade our plan. Right? So we plan our trades. Tomorrow, we trade the plan together. Guys, the best place tomorrow morning to do it with me tomorrow morning is our trade room. We open up around 8 o'clock Eastern time. I'll put all the membership links. I'll put all the free course links, right, that you need to grab the free trading course. I'll put all that in the description of the video. So grab that link, or I'll put a big button if you're watching tonight on the blog at Sideways Markets. Take the free course first, learn the strategy basics, get the wind at your back, get the momentum going in the free course. That way you're primed and ready to make some money with us here soon as a new student in our trade room. Don't forget the easiest way to get more information, any problems problems with membership, any problems with the free course, the easiest way is call us or shoot us an email or use live chat. We're always standing by to help out. Again, you can post questions in the comment section below, but I tend not to give those comments as fast as I will for a phone call or an email or a live chat support. All right, guys, so keep in touch if you guys have any questions, and get some rest. Get some rest. Get a busy week ahead of us here tonight. Enjoy the rest of your evening. Be on the lookout, though, tomorrow for that bad news is good news, those earnings reports. And I'm excited. Got a big week ahead of us here. We had a great first day this week in the trade room. Hoping for some more good stuff coming tomorrow morning at the opening bell. We're out of here for now, though. My name is Joseph. Thank you so much for tuning in. Hit that like button if you enjoy it. In the meantime, be well. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.